Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be discussing the end of the financial year and 3 ways to use your tax returns more wisely, the All Ordinaries Index, and then this week's stocks. Now before we jump into the report, I'd just like to mention if you have any thoughts on investing or trading, please comment below and be sure to subscribe to our channel. Now let's get into this week's report. Year-round we pay tax to the government to pay for public goods and services that we use every day, such as health and community services, national defence, education and infrastructure like roads and railways. These contributions help to improve the well-being of our society, and it's around this time of year that individuals get a little bit back of what they've been paying out in their wages. Now it's pretty simple really. At the end of each financial year, we calculate our taxable income to see whether we paid more tax than we need to. And if this is the case, we're entitled to a refund. That said, some of us find we've not paid enough tax and so have outstanding tax to pay to the government. Now, it's our legal right to minimise our tax, but we cannot avoid tax. Right now you'll be thinking of your tax return, and so I urge you to talk to your accountant and not only get the best return that you can today, but more importantly plan for next year. Today I just wanted to talk to you how you can use your returns more wisely. In Australia, the average tax refund for an individual is $2,574, which is very nice indeed. However, all too often when individuals receive their tax returns, they're not being wise in how they use this extra bit of cash. Now some spend it on goods such as a new TV, the latest new phone, a new couch, holidays, and the list goes on. Now don't get me wrong, getting new possessions is always nice because who doesn't like new things? But the real question is, are you being wise with your money, and is there a better way to use this extra cash? Here are 3 ways that you can make the most of your tax returns. Firstly, save it. Now would it surprise you to know that only 21% of individuals save or invest their tax returns? This number is surprisingly low, and what's even more worrying to me is that we are seeing a generation of young individuals growing up with poor money management skills. On average, only 12.7% of 25 to 35-year-olds save money, with the top 3 saving goals including saving for a holiday, saving for a rainy day, and to buy or renovate a home. A survey conducted by the Commonwealth Bank of Australia found that 56% of people would not have enough savings to handle a temporary loss of income, and 1 in 3 households would be unable to find $500 in the event of emergency. Now I'm not sure about you, but I find that that's an alarming number. When you receive a tax refund, you got it from your hard work, and so it just makes sense to put money aside and build your future rather than spend it on unnecessary goods. The next one is invest it. Individuals who see the real value of their tax returns know that the money is far better off being invested than just simply saved. This is quite simply because just saving your tax money won't make you rich. Investing your tax returns is one of the best strategies to accelerate your wealth in the long run. In fact, that little boost to your investing each year can have a dramatic effect on your wealth at retirement through the compounded growth it will achieve. Receiving that extra amount of money each year can and will make a big difference if you're investing your tax returns into the stock market every year. Even if you don't beat the market and receive the average return of 11.4% per annum over 20 years, just investing your tax return of $2,500 a year could make $195,339 difference. That's almost an extra $200,000, all from just investing your tax returns alone. The next one's pay off your bad debt. One of the most overlooked and important ways to be wise with your tax returns is to pay off your debt. The average loan or credit card debt for an individual is $4,437, with the average interest repayments per annum of $731.18. Now you might like to visit one of the many mortgage calculators on the web and do an example of depositing $2,500 each year as a one-off payment and see how dramatically it decreases the time to pay off your house and, more importantly, how much interest you will save. Now around the world, managing debt is challenging for many, and so every little bit you can do to minimise the interest you pay is very worthwhile. So when it comes to tax returns, using it to get out of or reduce your debt is one of the best ways to utilise your tax return dollars. So there's 3 ways that you can be more wise with your tax returns and take control of your finances. Now, let's get into the charts. Okay, on your screen right now, we've got a weekly chart of the All Ordinaries Index. And as you can see, last week was a really nice week, actually. It opened and traded down a little bit earlier on in the week, but closed on Friday, the 6th of July at $6,355, and it is starting to move up quite nicely. Now, I remember a week or two ago, I did think we should have a little bit of down movement, and really last week was a bit of that. It was, you saw, sorry, not last week, the week before, the week ending the 29th of June, we saw a bit of a downward move. It did close lower. It didn't go down further last week. Now, that is a positive sign because last week's bar did not trade lower than the previous week's low there at 6259. As you can see there, it was 6265. That's a nice strong signal to suggest this 6,404 point will be broken in the not too distant future, but it won't go up forever. We've got to have 1, 2, 3, 4, 5, 6 bars moving straight up through here. And we've had 1, 2, 3, 4 is inside 5. So I think the next 1 or 2 weeks will peak us out, and then we'll have 1 or 2 weeks down from there. So don't expect it to go too high, only maybe 1 more week, maybe 2 more weeks up before it has a week or 2 down. I'm still thinking this 6,581 point level is still very, very achievable. We're also looking like the all-time high, where, so let me get back to where's the all-time high? Let's go to the monthly chart. Again, monthly. So this all-time high back in November 2007, 6873. We're getting closer, as you can see here. I think we're getting up into here. I think we could get up to this 6,800 point mark by the end of 2018. If not, it'll go through there till probably around about February, March next year. I think generally our market will be bullish, probably around March, maybe even April or May, but around about that sort of area, around March, will be peaking up. And I'm expecting it to break through that previous all-time high there of 6873. Now, this week we also wanted to chat about, we've had a few emails coming through or messages on our post here asking for different stocks. Today I've got the Aussie US dollar as well, and along with a few other stocks like stocks like AMP, and I'm going to cover gold as well. Somebody's asked me about that as well. But let's get into the Aussie US dollar. On the screen right now, it is a daily chart at this point in time, and I just wanted to show you that briefly, how it hit that support level there at 73 cents that I have here. And this is the same chart. I haven't changed this since the last time you saw it on a previous recording over the last month or so. I can't remember exactly when I did the Aussie US dollar, but it is there. We did think it was going to drop out of this rising flag pattern down here. It's been finding some support around that 73 cents. As you can see, all the opens and closes. If I just scroll that up a bit so you can zoom it up a little bit, sorry. You can see all the opens and closes are above that 73.2 cents. So they're all up there. Last week, 5th of July, it did go down to 73.61. It's made a higher trough, broken through the previous peak here at 74.25. So it's now looking like it's a little bit more bullish. Now, on a daily chart, that's great, but that could be just a counter trend in a longer move downwards, and we need to be really, really careful. This is really good for short-term traders. The level of resistance here is at 74.8 cents. So if it does break through that, that's a really, really good sign. If it does hit its head on that and start to fold away, then it could go below that 73 cents mark there where it's finding some support. Let's go onto the weekly chart, and let's just pull that back a little bit. You can see here where that support level is. So if it does break through this, it could end up down around that 71.5 cents. And right now, because it has been bearish, we need to assume that it will continue to be bearish until it proves that it's not bearish at this point in time. So as I said, this 74.8 cent, that sort of level there, that's really, really critical. If we can get through that and start moving up towards this 76 cents level, that's auguring that it might be more likely bullish. So I need to see more bullish signals on that weekly chart. Now we're going to go into gold. Now there's a couple of gold charts that I want to show you. Here's one, there's the gold index, or on the ASX ticker code GLD. We've got that there, and you can see here a history of this back to about 1990. If I just bring it back here, you can see history of gold back to 1990, and you can see here how it had fallen away quite significantly. And I'll just put my cool little retracement tool on there, and you can look at that, and you can see how it fell about half of the distance it rose from that 1990 $1.99 low to its high, its most recent high there at 1920, which it did in September 2011. So it fell away very, very heavily down to that 50% level. You remember I'll talk about that being a very important level. So it was $1,046. That was the low in December 2015, and it's bounced up and found support, but it's struggling to get through this sort of level here, this 1,376 level here, and that's really a tough point for this for gold at this point in time. And right now it is looking a little bit more bearish rather than bullish. It's not a good sign. It needs to break above that level. So if I whack my little horizontal line across there, it needs to break through that level to be bullish. If it starts to keep falling away, then this low here at 1123 is in danger. So it'll be interesting to see how far this move downward comes back at this point in time. So what I would like to see, let me go to the weekly chart on here. So what I'd like to see, if I put my little tool on here and I put it up to here and go over there, it needs to stay above this 50% level, or that 1245 or $1,245 level. If it can't do that, then as I said, this low back here at 1123 will be in danger. Let's now look at another one. We've got the S&P Gold Index. It's slightly different. As you can see, the chart looks different here, and so gold is traded in futures, or futures contracts for gold, so that you can buy physical gold or you can buy futures contracts. So there's a little bit different here, but right now this one actually looks quite bullish, and as you can see there, this gold index is up at, it closed at 5369. So it is auguring for that gold GLD to turn and start to be finding some support and start to move up. So this is how looking at with the gold index is looking much more bullish. And this stage, it looks like it's going to head through that 5760. So you need to take in things, because it's all about cause and effect. Like the Aussie US dollar creates changes in this as well, because obviously gold is sold in US dollars, and we need to look at that in terms of, when we're buying gold, or whether buying futures contracts, or we're using CFDs or some other leveraged instrument to get into gold or get exposure to gold. So we need to combine a lot of things. Now, I've kept it quite simple today. Gold is really good in terms of it's very cyclical. It's really easy to trade if you understand price, pattern and time. If you don't, then it can be a little bit more difficult for people, because generally gold, you're buying it on a leverage contract rather than, most people don't buy the physical gold. People do that out of the Perth Mint. But most people trade it on a leverage contract like a futures contract or CFDs, or even warrants, those sorts of things. But at this point in time, as I said, it's looking like it's turning around and it's going to start to move up. So there's AMP is the last one I've got to do, and I've got to find out where my AMP chart is. There it is. And let me look at that. AMP is quite interesting, and I'm not sure, I can't remember the person's name that asked for AMP, but it's one of those stocks that just constantly disappoints people. But as you see, because it has huge big rises, but then it just goes down and sideways for quite some time. And right now it's been falling away to getting close to its near all-time low. Its all-time low, if I can put my pointer on there, is $2.73. And there's at $3.53 in June. Now currently we haven't gone lower than that. If I bring that up, you can see here that low there in June. But this, what I need to assume, it is bearish, because it has been bearish, and it's been bearish the last few months. So I need to assume it will continue to be bearish until we get some more strength. Now it has traded up. Currently it's at $3.63, so it has traded up a little bit. Let's just go into the weekly chart there, and you can see that it really hasn't proven to me that it's stopped falling yet. So would I own AMP right now? No, not a hope in hell I'd be owning BHP right now. Would I be buying BHP? Sorry, what am I saying BHP for? AMP, not BHP. AMP, would I be owning BHP right now? No. Would I be buying AMP? No. I'd have it on my watch list, because when stocks get near their all-time lows, like this one is, Telstra's also doing that, they're likely to find support at that, because that all-time low is the lowest price that anybody ever wanted to pay for this stock. So just watch out for it. So that's it for me for this week on the charts. Good luck, good trading, and I'll talk to you next week.